Sterlite Tech will acquire 100% stake in Impact Data Solutions for an enterprise value of 106 crore rupees. So how will this acquisition impact its balance sheet position? To take us through the details of the deal, the group CEO, Anand Agarwal, is joining us on the show right now. Mr. Agarwal, thanks very much for taking out the time. A relatively smaller acquisition, 106 crores in terms of enterprise value. I believe it won't have too much of an impact on the revenues or EBITDA, but just to quantify for the sake of the record, could you just tell us how much would the impact be?
Sure. Good morning, Devina. This for us is IDS for us is a capability acquisition. It provides us design and deployment capabilities for inside data centers. So you're absolutely right when you say that it won't have too much impact either on our revenue or balance sheet in the short term. But we see this capability providing us an entry into the large cloud data center opportunity, which we are seeing globally becoming extremely relevant. So both the hyperscale data centers which cloud companies are building, as well as the edge data centers that they are building. So this acquisition provides on the STL platform, this capability gives us an access to that large opportunity.
How big is that addressable market for you?
So currently we believe this market overall globally would be of the order of 7 to 8 billion US, and it's growing very rapidly. It's the entire data center build market, and within this is the infrastructure piece which we are focusing on.
So is this on the back of your focus on increasing, your services part of your portfolio, because you've got some headwinds coming in from your product portfolio?
It's essentially our focus on increasing our global addressable market size. So we have 4 customer segments. We have the telecom service providers, we have the citizen networks, we have large enterprises, and we have cloud companies. So within cloud companies, our addressable market till date was essentially just the network that was being built between the 2 data centers. With this acquisition, we go inside the data center as well and start playing a significant role in the capex that goes inside the data center. So it provides an opportunity for our products business, our services offering to provide a consolidated, integrated solutions, both for inside data centers as well as outside data centers, and primarily focused on cloud companies.
So, you earlier on stated that you are looking at acquisitions to make sure that you meet the goal of expanding the addressable market to, I think, $75 billion by 2023. Are you a long shot away from that?
No, we are moving clearly on that direction. We are moving clearly as per our strategy. So we acquired a software company a couple of years ago. We acquired a products company in Europe last year. With this acquisition, these are all acquisitions which are small in size, between say 100 to 200 to 50 crores, but each of them provide us that capability for addressal of that market. So clearly this increases our addressable market by another, as I said, 7 to 8 billion dollars. And 75 billion is a goal that we intend to achieve by 2023, and we are absolutely on the path for that.
Okay, let's talk about translation in terms of revenue CAGR, and are you looking at a translation of earnings growth to the tune of about 9-10%, or maybe you'll target some more?
This essentially, are you talking about the particular acquisition or the STL as a whole?
As a whole, including all the acquisitions, okay, and when the synergies play out, and keeping in mind a consolidated entity.
Sure. So on a consolidated basis, we have grown rapidly over the last few years. 2019, we are seeing clearly in terms of it's more of a capex consolidation on the telecom side that we are seeing. And the other areas like cloud, the other areas like enterprises continues to be exciting for us. In terms of clear projections of how the year will turn out to be, since we are very close to the Q2 results, I think we'll give an indication of that post our Q2 results. But we are well on our path as what we have stated.
All right. And you've been constantly growing your order book position as well, despite facing challenges in the product business. Is that also going on track?
The order book is largely going on track. Yeah. As I said, 2019 is slower than the previous years that we have seen, primarily due to capex slowdown that we have seen in China, India, and now moving on to Europe as well. But overall, as a company, we are largely on track.
When does the additional volumes from the optic fiber cable expansion to about the 33 million kilometers start to kick in for you?
That expansion essentially will finish by June of next year, 2020. So a significant part of that will start showing up in FY21.
Okay. Also, any risks that you're facing in terms of probably, moderating revenue trajectory, which could be on the back of, 5G related capex getting pushed back, Chinese telcos posing a key risk, anything on those lines which you feel could be a hindrance?
So as I said, 2019 overall, what we are seeing globally, there is a bit of consolidation on capex happening from most of the customers, especially on the telecom side. We saw it in China, we are seeing it in India currently. And we are using our current order book to kind of tide through the current situation. But on a holistic level, we continue to be very overall positive and bullish as we move forward.
Okay. Now, just, are you intending to take your exposure in the services business to what level? I believe services contribute about 45% to the order book. Are you looking at increasing that contribution in a big way? And then also because of the fact that services, in terms of margins is slightly more compressed than the product side. So will that impact the overall margins and squeeze that a bit from low teens to probably under 20? Low 20s to under 20? Our services business in terms of revenue mix has been closer to 35% till date, while the order book is closer to 45 to 50%. So as the mix of services keeps increasing, the margin may go towards 18 to 20%, and that's been our direction as well as our guidance. At the same time, the services business has a better return on capital deployed than the products business. So on a mix perspective, I think we'll see the right mix of margins and return on capital. Okay, got that. So could you talk a little bit more about, whether or not you do see the demand pick up coming in on the optic fiber side? When do you see that picking up? Because China has remained flat, and the expectations are that you may not see a really meaningful pickup till at least maybe next year onwards.
Sure. So this year for China, we've seen the two tenders happening of China Mobile and China Telecom over the last four months or so. So this year is on an optical fiber front globally, it's going to be sort of a flat year. 2020, the projections are that the growth should be back because some of the leading markets, 5G is moving on to commercial deployment, and that should spur up fiber demand. So 2019 overall from fiber as well as global capex is a consolidation and a flattish year.
Okay, and what about prices? Where do you see that headed?
Prices have been pretty stable over the last. We saw a decline happening between November and February of this year, November last year till February. Since February, March, it has been pretty stable throughout global.
Do you feel China prices have bottomed out?
What we are seeing, it's been in the same range since February, March or so.
All right, Mr. Agarwal, thanks very much for joining us. Congratulations on the acquisition. Appreciate you speaking about that with us here on the platform.
Sure.